Today's chart of the day here, Tesla. Been in the news recently. A lot of stuff going on over there. Now, the best part of what's happening at Tesla is they just announced their 5 millionth car. That's a ton of cars to produce, but obviously there's much more to come. The other big news break was they were talking about creating a die-cast model of the entire floor of Teslas, which would help production. A couple of key levels I want to point out here, right? Just some of the swing highs and swing lows we've seen over the course of the last year or so. Ton of action below that 200-day moving average. That move really started all the way back in September of last year, carving out that bottom in January, butting its head up against that 200-day on a couple of instances, and then now finally the breakout in late May, early June. So that's a good thing. So now we've kind of shifted from this regime of negativity and downside of the downtrend, and now we're back into the uptrends of yesteryear for Tesla. So now I want to zoom in a little bit closer. Basically this year, because off of this range from the lows to the highs, you can carve out your fib levels, and you see the 38.2% level was where we had one day of sort of a stop grabber, bounced below that pretty violently, and then recovered. So that's nice. That's a good sign that stop grabber was successful for the bulls. Got a gap up above that 50-day moving average, which is now starting to reel in just a tad. Okay, but still a lot of constructive things on the chart. I'm going to delete these fibs so it looks a little bit cleaner here. So these 50 days are very important. They tend to attract, the price action, just like that good old 200-day. Here is your famed golden cross, where that 50-day cross is above that 200-day. I tend to take the golden cross and the death cross with a grain of salt. I mean, it's just something that's going to happen mathematically when something goes from trending in one direction and trending another direction. Doesn't necessarily mean it's going to continue to go that way. It just means that, hey, that trend has turned. So at least you get a little bit of confirmation there. I didn't like how the stock couldn't get back into this gap. So there's this gap down on earnings, and they defended it there. So you see this high of 280.93, and recently we couldn't get up into the 280s. We got close, but it couldn't get in there. So that's less than ideal, from a standpoint of constructing any sort of bullish move. The other thing I've noticed, and which I'm pretty sure we've all noticed, is volumes just sort of ticking down. There just hasn't been that much interest. Part of that is we've got FOMC coming up, so there's definitely a wait and see approach that's taking. The other thing is September. People get a little nervous around September because the market historically is not too good this month. But overall, you got a little bit of overbought action in Tesla, which is why I started to creep down, but not really. I mean, 70 on the RSI is really the threshold you want to see. That's what you saw back in June. You had another one in July over here. We're a little bit overbought, and then came down. Last time we were oversold was in August. That coordinated with that bottom, which is pretty nice here. So very textbook move there. But here, I think your intermediate term sort of bullish trend is intact. The long-term bullish trend is definitely intact. And I'd be looking for a little bit of a pullback here to go ahead and add a little bit more exposure to a stock like Tesla. It feels a long way down to this 200-day right now. So I think more of the support, should this continue to come to the downside, is going to be just sub that 250 level. But I think it's more likely to catch a bid, as this news continues to come in pretty good. Things are moving in the right direction. Everybody's bullish on Tesla. So there you have it for my chart of the day, Tesla.